Welcome to Embargoed, intelligent talk about sanctions, export controls, and all things international trade for trade nerds and normal human beings alike. I'm your host, Tim O'Toole, and with me today are a number of important guests because we are going to talk about gold. Gold and sanctions. This is the gold episode, and with us are two extremely knowledgeable guests about gold. One is Brad Brooks-Rubin, another is David Soud, and I'll let them kind of give their background for themselves. Brad, why don't you start, and then David, go next.
Thanks, Tim. Thank you all so much for having us and for spending time on this excellent podcast talking about gold. I'm a big fan of the podcast. I am a partner at a boutique law firm called Arktouros that specializes in sanctions, AML, digital assets, and a range of other issues. I provide a lot of advice to non-governmental organizations, private sector clients, and companies in the mineral supply chain world around both sanctions and responsible sourcing. Just briefly, by way of background, I've been working on minerals issues for about 20 years. The State Department's Sanctions Coordinator's Office, where I was an advisor, senior advisor there, and among my portfolios, I have gold, diamonds, natural resources, bling-focused portfolio, as it were. And I know you had Eric and Josh on in a recent episode, and so I was part of that world. I've had a couple of jobs in the private sector in the gem and jewelry industry, and I was an advisor at the State Department in the early 2010s around conflict diamonds, conflict minerals, and from 2005 to 9, I was a lawyer at OFAC Chief Counsel's Office, where I handled sub-Saharan African sanctions programs, most of which have a connection to natural resources. So
clearly we've got the right guy on the podcast.
Well, I don't mean to be so long-winded, but I've touched this on, in the private sector and government and in the world. And honestly, gold is one of those issues that's complicated enough that you need to look at it from lots of different perspectives. And I've had partly I can't keep a job, and partly I've had the opportunity to work in a lot of great places. So
that's awesome. And David, why don't you fill us in a little bit about your background?
Yeah, I often refer to myself as a recovering academic, though not in a gold-related field per se. Actually, my doctorate's in English. But for the past 10 years, I have worked extensively in what we call resource security, primarily with two entities, both of which are built essentially family businesses. One is Consilium, which is a for-profit consultancy, and I'm head of research and analysis there. We do a lot of work in security, maritime security, but also resource security, and also a charitable nonprofit called Auxilium Worldwide. We have an array of projects, but there I'm head of resource responsibility, and we do a lot of work in these areas too. I cut my teeth in this when it comes to sanctions and extractive resources on actually oil and fuel. And did a lot of early research on that globally, and released a series of reports with the Atlantic Council about several years ago, leading up to about 2020, 2021. And it was the oil stuff that led me to Venezuela. And you can't really get a good sense of Venezuela without also, especially since 2016, looking at gold. And once I started looking at gold, it became, as Brad said, it's such a complex and fascinating issue that I got deeper and deeper into it. And so in the past several years, I've worked with governments, with intergovernmental organizations, probably most prominently the OECD, with law enforcement agencies around the world, regional security bodies around the world, tracking and helping them target and understand bad actors and networks of bad actors around the gold supply chain and in gold markets, looking at the full spectrum of illicit and criminal activity attached to gold.
Wow. So you guys know way more about gold than I know pretty much about anything except maybe cycling. But that's another subject for
we could talk about cycling too. I could go there with you.
We should talk about the Giro at some point. So also with us today are two of our essentially, they become basically co-hosts here, Melissa Burgess and Collmann Griffin. Collmann and Melissa, welcome back to the podcast. And so with the intros that David and Brad have given us, I think it just kind of walks right into a question about kind of, why don't you tell us a little bit about gold and sanctions and the gold market and how those interplay with each other. So, start with how gold moves around the world and, how it can be a currency and how it can be subject to sanctions. I mean, why don't you just start there? And if you don't like my question, answer another one.
I could sort of start off here. To understand how gold moves around the world, you first want to have just a basic grounding in the supply chain from mine to market, right? And the mining for gold happens at different scales, and it's very important to understand those different scales. There's sort of the large scale, industrial scale mining characterized by what they call mining seniors, sort of the Barricks and the Newmonts, of the world, and other big companies. And then there's sort of a gray area of mid-scale mining, which is highly mechanized and has a lot of initial processing attached to it. About 20 to maybe even 25% of the mining or of the gold that's produced comes from what we call ASGM, artisanal and small-scale gold mining, which is usually done by small groups, co-ops, individuals even, operating often in areas with relatively limited state presence, often with very limited technology. It's defined differently by law in different places, but it gets a very, very disproportionate amount of attention when we talk about illicit flows in relation to gold, because the ASGM sector is vulnerable in many cases to greater exploitation by organized crime, by non-state armed groups, by other bad actors, unscrupulous traders, etc. And that's become the focus of a great deal of the conversation. Now, once gold's out of the ground, it's important to recognize you got to move a lot of dirt to get a little gold. If you've got 5 grams of gold per ton of crude material, you've got a good mine. Okay. If you've got 10 grams, you've got a spectacular mine. And so it takes a lot of work. And then once it comes out of the ground, it needs to be processed into a form that can then be moved to market. And that usually is one of 2 forms. At the large scale end and into the mid scale, and now increasingly at the smaller end too, you sometimes see what's called gold concentrate, where essentially you produce something in which you process the milled ore into something that looks like sand, but actually has a higher gold content that can be maybe anywhere from 20 to 100 or more grams per ton, and then that will go via various trade routes to smelters and then to refiners when the gold is more fully processed. The other thing you get a lot of the time is usually through a process of dissolving the gold in cyanide, the production of what we call doré bars. And that's a really important thing to understand when you're talking about, bad actors in the space too. Doré bars are basically sort of rough bars. They're not those chiseled final sort of bullion bars of pure gold, refined gold that people see in movies, et cetera. But they contain a lot of silver. They'll contain a lot of copper. They'll contain some other residual, sort of metals. They then can be shipped almost exclusively by air. Concentrate usually moves by sea to refiners who can then refine it to what 995, 99.5% purity, which is sort of the threshold of gold as a financial instrument, right? A bankable financial instrument, what we would normally think of as gold bars. Ideally, you get what they call 4 nines, which is, as close to completely pure as possible. And once gold comes out of a refinery, it can go to a variety of end users. and it can be tailored to those users. It's important to recognize too, the refiners very seldom own the gold. They provide a service for whomever is the gold is intended for, and then and so that gold will go to the jewelry industry. It'll go to tech. It'll go to other applications, and all along that supply chain, there are opportunities for bad actors to sort of move in and exploit it for financial crime, for sanctions evasion, for various forms of criminality. And of course, one of the things that happens with that refined gold is it ends up in bullion banks, right? And once gold is in a bullion bank, it's generally very, very carefully traced, right? The provenance from that point has to be really ironclad because it's an investment asset that is used obviously by central banks, by private investors, by public investors, by a whole range of people. And of course, it's well known, especially nowadays, looking at how the price has gone and the state of the world. It's obviously a hedge. It is that fallback investment that's going to hold its value. And one of the things that makes gold particularly problematic in the context of sanctions, it's kind of a hybrid entity because, as you can see from the supply chain, one thing gold is it's hard currency. It holds its value, whatever that value may be at a moment. It holds it generally around the world. It's very easily convertible to any other form of value, any fiat currency, any other. You can use it for commodities trades of any kind. And yet at the same time, it is itself a commodity moving around, and it actually travels the world in as much as a dozen different forms.
So basically, where we are from that, and that was very helpful, David, but that discussion kind of pointed out to me kind of two aspects of gold in terms of sanctions. The first being that gold is essentially an alternative form of payment. And the sanctions system in the last 10, 15 years has really focused on wire payments and banks and financial institution transactions that are pretty easily trackable. And even crypto, Collmann and I were talking before the call. I mean, there is the blockchain with crypto, but there's no blockchain with gold. So gold has one possible use in terms of sanctions, in terms of a payment form that is less trackable than, say, some of the other payment forms that have been out there. But then also gold is a commodity. And so like, oil, it is a commodity that if you have that sort of natural resource, it's an important part of your economy, the gold sector can be sanctioned, as we've seen in other countries. And so, Brad, why don't you kind of talk about both of those features of gold that David has set up very nicely and talk about how they affect sanctions.
Yeah, sure. And I think you hit on it exactly. And frankly, why it's so challenging. I mean, if we think about the large scale producers of gold that David mentioned, the large scale miners, usually in the top three are Russia and China. China, the leading producer, also the leading consumer and buyer of gold, and Russia. And then gold is spread around the world, as David was saying. If you look at the top 10, you've got everything from Mexico to Indonesia to Ghana. But importantly, also you have producers like Venezuela, Sudan, et cetera. So, yeah, I mean, the approach to sanctions, when I was at the State Department and sort of trying to explain why we needed to focus more on gold, I would sort of resort to this line of like, wherever there are bad guys, there is gold. The challenge from a sanctions perspective is it's also everywhere there are good guys. Like it underlies, there was the reporting yesterday that, by value, because of the way the prices increase, there is more value in central bank reserves in gold than there is in U.S. Treasuries right now. So that creates a sanctions challenge from both with gold as a commodity and as a payment, because you don't want to disrupt the entire supply chain. You don't want to disrupt the system, but you want to target the bad guys. And that's challenging. So as you noted, we have a number of sanctions programs where the U.S. government decided that actually there's just too many bad actors and too much challenge in this place for the gold, that this has only really been as a mining commodity. So Venezuela, Nicaragua, sector-based sanctions. You're doing business in the sector, you can be sanctioned. Full stop. Doesn't really matter if it's illicit, if it's licit, large scale, small scale, trading, doesn't matter. Any business, you're covered. And then, there have been a number of sanctions that we've tried to impose on, again, those sort of larger scale producers in Russia, mining companies and mining related entities across sub-Saharan Africa. But really what's become, I think, more interesting and more challenging is how do you get at the bad actors that are along the way, people that are using gold as a form of barter with respect to whether it's, weapons for gold between Russia and Iran, or, there was very big reporting, very detailed, important reporting that came out from the New York Times in the last couple of months that David contributed to, talking about cartels in Colombia that were selling, that are moving gold through various shell companies and various processing, exporting and processing mechanisms that's ended up in the U.S. Mint. So how do you get, when the U.S. Mint is an ultimate consumer, figuring out how do you get at the actors in that supply chain without disrupting the way that the whole flow works has been really, that's the challenge, right? And I think one important note is, in the policy making world, and having worked on gold in government a few times, there are the people who understand gold as a commodity and gold as a natural resource and sort of how it moves, and think about financial crime, but also responsible sourcing issues, environmental issues, human rights issues. And then there are the people that are doing gold buying for the Mint or for the Treasury Department, who think about gold as a financial reserve and are they're in a different part of the Treasury Department, they're at the Fed. Those people are rarely in the same room, right? And they're rarely talking to each other. And so from a policy perspective of how do we design the right sanctions, it's often challenging because we don't really have a holistic picture of gold as a financial instrument and gold as a commodity. And so the sanctions have ended up being, I think, more focused on the, how is gold affecting this particular issue in this particular place, rather than how do we think about the role gold is playing in sanctions writ large, which we're starting to do a bit on oil, and I think is starting to happen on crypto, but I think we're a long way away from that on gold yet.
Yeah, I do think that with gold and sanctions, it seems to be kind of idiosyncratic country by country programs that don't seem to have kind of a common theme to them, other than gold, Nicaragua or Venezuela is a natural resource that there's at least enough of to have an operating sector. But how the sanctions work in those countries, doesn't seem to be, when sanctions are imposed and how the sanctions work doesn't seem to be unified from country to country. There isn't kind of a more global treasury policy on gold. Why is what you mentioned the cartels, Brad? How can you talk a little more about how cartels kind of interact with the gold sector? Is it just because of the lack of traceability and the fact that these gold mines are often out in rural places that may be easier to infiltrate? Or, that's just a wild guess, but if you want to talk a little more about that, that'd be great.
Yeah. I can at least get us started on that. Cartels have a really long history with gold. And you can go back to even the 1970s, 1980s. One of the big gold-based money laundering cases early on was actually in 1994, when the Cali cartel out of Colombia was buying huge amounts of gold. They were using their, cocaine revenues to buy huge amounts of gold on the Italian market. And so much so that they were distorting the market, which got the attention of authorities and led to that operation. And since then, we've seen the cartels do lots of different things to use gold to launder the proceeds of their various crimes. And also, we should be clear, it's a revenue stream for them. People used to use the phrase drug trafficking organizations. It's completely obsolete now. What these organizations are is just very, very highly efficient criminal enterprises with multiple revenue streams. So on the one hand, what you've got with the cartels is they will go into areas, as you said, remote areas, particularly where it's ASGM, and they will either extract, some kind of tax from the miners operating there, or they will simply take over the mines. One way, the gold then becomes a revenue stream, but it also becomes a way for them to launder money, sometimes by investing in actual mining operations. But often, when you think about it, as you had pointed out, gold is a way to move concentrated value completely outside the global financial system, right? So one of the most simple and elegant ways to launder money is to do essentially on a more careful, scale, what was done by the Cali cartel way back when, which is take your dirty cash, buy gold, flip the gold into whatever cash you want in whatever jurisdiction you want, often with a refinery or trader that isn't going to be too scrupulous about how you're sourcing it, or maybe you've layered it through a couple of countries to obscure its origins, right? And then you've just got clean cash coming out the other end. Another thing that the cartels do is they'll take the same amount of gold and they'll just recirculate it through the market, often changing its form from like doré to simple jewelry to something else, or they'll even take refined gold and pretend it's doré or something like that. They'll move it in this kind of carousel that allows it to trigger cash transactions as the same gold moves from buyer to seller to buyer to seller, that allows for the laundering of millions and millions of dollars. They'll also sometimes just use what we call phantom gold. There's actually nothing in the box. They'll create a paper trail for a gold purchase, and the money changes hands, but there never was any real gold, which complicates the picture further. But when you're talking about the cartels, for instance, in Latin America, the Mexican cartels, as has been recently published very widely, have made a lot of money, not just moving gold and even stealing gold in Mexico. They also move mercury, which is one of the most destructive ways that in ASGM in particular, gold is separated from ore. And the environmental and public health costs of that have been enormous. There's actually been a saying in Colombia: if you want to launder money, you use gold. If you want to make money, you sell mercury. But there's also significant involvement in the mines by, for instance, the Clan del Golfo in Colombia. And also, when you look at the militant groups, the non-state armed groups, the ELN in Colombia and Venezuela, right? Mining's in their DNA. They have been in gold mining from the start, way back in the 60s. And they know how to mine it. They know how to move it. And they often have exporters that they maybe beneficially own or collude with that allow them to fake the origins of the gold, and then export it into the legitimate market. The same thing happens in Brazil with, for instance, the PCC and the CV, the two top organized criminal groups there. It happens in Ecuador, where some of the larger gangs are deeply involved. And these guys don't respect borders. They're all operating in mining areas and in ports, crossing these borders in remote areas, especially, with relative impunity. In Peru, same thing. So
you mentioned Latin America, David, and particularly Venezuela. Venezuela was a sector, the gold sector in Venezuela has been under sanctions for a number of years, but those seem to be lifting with the change of president in Venezuela. Can you talk about some of the risks, and I'm going to throw this out to Brad as well, some of the risks that are going to arise from relaxing the restrictions on gold in Venezuela?
Sure. Yeah, I mean, the administration in March issued a general license allowing for U.S. persons to engage in gold-related transactions with certain conditions, certain reporting conditions, et cetera. I think there's a few things to sort of point out about that. One is the general license applies to the Venezuela program, right? And so, as David has noted, there are kind of sanctions and sort of broader threat finance risks that exist in Venezuela outside of just the Venezuela sanctions. You get into, narco and CT and other sanctions programs and transnational criminal organizations. So there's the broader illicit finance risk, the broader sanctions risk that comes from touch points in Venezuela to other sanctions programs. Then you get into the sort of money laundering. I mean, the entire sector, there's been this sort of state level of control over, the last number of years, but lots of illicit actors operating. And as David mentioned, whether that's in the mining areas, whether that's, traders and exporters and processors along the way, where there may be, cartels or other kinds of sanctions risk embedded in the beneficial ownership, embedded in the operation, embedded in the where the funds benefit. That's just the financial crime side. I mean, as David talked about with mercury, deforestation, human rights and labor rights risks. I mean, there are a number of NGOs, the FACT Coalition, the Global Initiative Against Transnational Organized Crime, and others that have been doing really detailed reporting and a lot of really brave journalists for many years who've been reporting on the ground about the conditions and trying to raise the alarms when the sanctions were imposed, because it wasn't like the gold stopped moving. And so now we're in this interesting moment where there's, as you said, there's been a change in president, and there's an interest in figuring out how to get investors in. And so now we're in this moment where how do you transition from a sector that has been really shrouded in risk and move it into and help to support investments in a way that might make it less risky over time, but there's still this sort of messy part of the middle where we have to deal with, well, can you buy this stuff in the meantime? And there's been lots of public reporting on a couple of big trading companies that have moved some Venezuelan gold, and there's questions. Wyden wrote a letter to Trafigura saying, talk to us about how you bought this gold, right? And so there's a lot of interest in comes up in lots of different sanctions contexts of what happens when you're moving from a point at which there was a very strong sanctions, forward-leaning sanctions policy, and now we're trying to transition it. It isn't, you can turn the light switch on and off on the sanctions, but you don't turn the light switch on and off on the conditions on the ground. And I think that's where we're wrestling now with how do we look at these illicit finance risks, the environmental risks, the human rights risks. The president might have changed, but the conditions on the ground are still more or less what they were. And now there's a bit more transparency. There's more opportunity for companies to get on the ground and do some observation and to do some analysis that was really impossible before. And I think that's really what we're kind of where we're standing. Is how do we deal with all these risks? Haven't gone away. One GL does not, a responsible supply chain make, and so we have to figure out how do you get through the rest of it. And on top of it, I'll just stop by saying, on top of it, when the U.S. government and other is trying to push people to source, right? It isn't just like here's a GL. Good luck, right? It's here's a GL, and we really want to see this investment. It's important to the administration that there are investors. They're directly involved. So then being able to raise the flag and say, I'm not so sure about this human rights and mercury, like those are challenging conversations where we're really at the middle of, do I buy this or not? Do I finance this or not? Do I allow this payment to go through or not? What other flags am I raising about this goal?
And David, I mean, are you seeing anything on the ground that's improving in Venezuela in light of the change in policy, or is it still kind of the industry is a mess because it's been a mess for a while and it's been kind of a place where people go to take refuge and try and go kind of around the ordered financial system? How can you change that so quickly, and is it changing?
The short answer is right now it's not. As Brad pointed out, the president may have changed, but the infrastructure that supported all the illicit mining and the illicit flows of gold out of Venezuela is all pretty much still in place. Um, and in some ways, it's exacerbated because since Brazil, for instance, has tightened up its regulatory regime around gold and gold mining, we're now seeing where you used to be able to launder gold into legitimate markets in Brazil, for instance. Now they're more likely to send that gold into Venezuela to be laundered there. And there's certainly gold going both ways across the Venezuelan Colombian border. Um, the the ELN in particular, I would say, though there are other organized criminal groups, gangs, megabandas, whatever you want to say that are involved, including still elements of the dissident FARC. The ELN in particular controls a lot of those gold mining areas. They have historic ties at this point with elements in the Venezuelan military and security forces and governors and so forth. And there are a lot of people there that are accustomed to taking their cut, right? It's going to be very, very difficult to dismantle that. And I think when you talk about the risks going in, if I'm a trader, or if I'm going in to try to work out some way, because you don't want to completely de-risk, because then you're just turning this country's entire sector over to the worst in many cases. So you want to go in and start small. But there are two elements of risk there. Those touch points that Brad mentioned are huge. I mean, you're talking about designated terrorist organizations that are bringing gold into that market in Venezuela. And, you do not want to find yourself in a position, whether it's Venezuela, Colombia, Ecuador, Peru, wherever, of unwittingly financing terrorism. The other thing is, and this is an underrated risk, is success brings risks. If you are successful in cleaning up part of that sector and bringing in gold that can be verifiably clean, you're actually going to be angering a lot of people who have been taking their cut and have been exploiting it. And that becomes a security risk as well. At the end of the day, the ELN and some of the gangs and some of these other actors are going to have a say in how this goes. And that has yet to be resolved.
Yeah, I did want to just emphasize the point that Brad originally made, and I think, David, you just expanded upon, and that is that while sanctions have been lifted under the Venezuela program on the gold sector, to the extent FTOs are involved, and it sounds like, based on kind of your knowledge in the area, there are a lot of FTOs involved in the gold trade, not only in Venezuela, but in other parts of Latin America. Those restrictions are still in place, not only from a sanctions perspective, but also, U.S. criminal statutes relating to support for terrorist groups. And so the Venezuela sanctions risk was only a piece of the puzzle, and it sounds like it maybe was even a small piece of the puzzle in terms of the legal risk involved in getting involved in those sectors.
Yeah, if I can, just one point I think it's a really important point from that David highlighted that gets missed, and I think it gets to also why sanctions are so challenging in this area, which is, when you see pictures of artisanal mines, and this maybe is more true in sub-Saharan Africa than Latin America, but you see pictures and, guys digging in rivers and, whole areas, deforested. There's sometimes an impression given that this is just sort of chaotic, right? That there's just sort of this mess of people and there's a scramble and it's a mess. It's highly organized, right? And people are moving really efficient amounts of, gold, of diamonds, of cobalt, you name it, of minerals in this manner. And sometimes from a sanctions perspective, we're like, okay, let's disrupt this, let's get at these guys. But as we know from any other number of sanctions contexts, unless you're coming in with a policy plan and hoping to replace it, and whether that's a development program or other kinds of interventions, you just sanction some companies, fine, they'll just rename them something different, as we know from many other kinds of contexts. If you try to do something more disruptive, but you don't come in with something on the back end, well, then very quickly again, like the system will figure out how to be resilient and come back, because at the end of the day, people still need to move the gold. They need to eat. They need to move their money. They need to make money. And so, this is gold in the artisanal area or in a place like Venezuela. The concern is, if you're talking about how do we have an effective sanctions policy without an effective development policy or defective, industry and infrastructure development over time, so that you're figuring out how do we engage with these guys who've been taking their cuts for decades. They're not just going to say, all right, I made enough, I'm good, I'm going to retire and enjoy my time at the beach. No, like they're integrated into the system. And so, this is something I've dealt with a lot on the jewelry industry side, where the jewelry industry says, all right, we want to start sourcing gold or mineral or diamonds directly from a particular place, in sub-Saharan Africa, et cetera. And they want to sort of swoop in, buy the stuff, and then go out. The people on the ground can't deal with that, because there are lots of people along the way who want their cut of that. And if they're not getting it, then they're going to make that very difficult. And so unless you have a plan, say we're going to sanction these bad actors, and we're going to figure out where they are across the supply chain, and we're going to figure out how to invest in a more responsible approach to supply chains, which takes years and sometimes decades, way more time and attention than any policymaker really ever has. That's where we sort of lose the ability to be as disruptive as we can, because again, the people who understand the sanction side don't understand how a complex supply chain on the ground like this really works.
And I would just throw in real quickly to that development point. It's absolutely critical to understand, especially when you're looking at the ASGM sector, you don't criminalize the sector. The miners are, as a rule, ordinary people practicing something that has been practiced for generations, trying to make a living for themselves and their families. And yet they have almost no access to formal financing. They have very limited access to legitimate markets. And, the bad guys are always right there with the money at both ends. And so, setting up the infrastructure and getting people to take on the risk to be able to try to actually get those small miners what they need to have their own resilience against criminal exploitation is very difficult.
Yeah, I have a feeling, and we're going to talk about it in a few minutes, that a lot of these factors are probably what lead to conflict in some areas that have a lot of gold around the world. But before we turn there, I know that Melissa has been looking into the fact that gold sanctions are not new and that there's a history there. So why don't you talk a little bit about TWIA and gold, Melissa?
Yeah, thanks. So it's interesting because the role of gold in sanctions has been debated from the very beginning, but I think the debate has been focused very much more on a very different aspect of gold, but that may also be becoming relevant again, given recent news about gold reserves. So back in 1917, when the Senate was debating the Trading with the Enemy Act, gold featured heavily because they were debating how to restrict foreign exchange transactions, and what were those based off of? They were based off of gold. Who has the gold? How do you move the gold? How do you stop the gold? So there were interesting hearings back in 1917 where they brought in attorneys from Commerce and the Federal Reserve, and they were debating how do we restrict gold, but also is it the Fed or is it Treasury that would be in charge of restrictions? So coming out, the very first sanction statute we had, so 1917, the original Trading with the Enemy Act, we had restrictions on the export and earmarking of gold. A year, like 11 months later, that got expanded to hoarding and melting as well. And then in the 30s, when some of this was debated again, with the gold crisis and the bank holiday relating to it, there were a lot of debates, but the language didn't actually change until 1941 when we added on that restriction on importing gold. So TWIA to this day still has the specific discussion of, it's not just gold, it's gold, silver, coin, bullion, currency, or securities. But TWIA to this day still has that language that was first added in 1917 and has been in place since the 40s. That language didn't translate directly to IEPA in the 70s. So the underlying concept of regulating foreign exchange is still there, but the specific call out to gold and silver didn't translate. And of course, a lot of that has to do with the gold standard and how foreign exchange worked in 1917 versus today. But it is very interesting that it's always been a feature, and that aspect of the feature, or that aspect seems to be coming back from what we see with essentially recent reactions to sanctions programs, Russia being a common example of that, and also kind of emerging markets trying to understand, are they investing in gold for their reserves? Are they investing in US treasuries? And how are they either reacting to sanctions or in some ways kind of ramping up to hedge against potential sanctions by acquiring more gold? So that's very different from the cartel issue, but it is interesting that gold has been there since the beginning.
Right. I mean, it basically is, the more things change, the more they say the same. I mean, I think gold has been a challenge for sanctions programs, it sounds like, since at least 1917, and it still is in 2026. You did mention the way that gold has been used in connection with the Russia sanctions program, and I know that Collmann, both in and out of government, has worked pretty extensively with the Russia sanctions program and may have some thoughts on gold and sanctions evasion, and I'm sure Brad and David do too.
Yeah, no, happy to jump in on that, but I think Brad and David are our real experts here. I think, when you turn to Russia, what strikes me about gold in Russia is it's exactly the same themes we've been touching on throughout this episode. Gold is both a commodity that generates revenue, potentially for bad actors, and then gold is a means of transmitting value around the world outside the U.S. financial system. I think, Brad, you mentioned exchange of weapons for gold between Russia and Iran. So it's everything we've been talking about vis-a-vis gold is present within Russia policy. I don't know, Brad or David, I'd love to hear your thoughts on that as well.
Well, I'm happy to. I can't resist. Melissa, that was fascinating. So thank you for the history there. And I wrote a piece on just security last year where I referenced even further back in history, Moses in Exodus chapter 38, when they're building sort of the initial ideas around the tabernacle, like he requires every one of the Israelite families to tally how much gold and silver they have, and the commentators say it's because he was worried people were hoarding and using it for illicit purposes, right? So we are gold's one of the oldest forms of value, obviously, and in that way has been both important and a problem kind of ever since. And in the current unstable times, the push to gold, and then the push to crypto, the newest form of value, and then in many ways you have crypto offerings that are backed by gold, right? So you sort of merge the two together. So that was a fascinating history on the Twitter side. And then on the Russia side, Collmann, I can just, there's leading up to the invasion, Russia had become one of the leading kind of purchasers of gold for its central bank reserves, and it had really sort of shifted its central bank purchasing. It had ramped up mining, its own mining, and China is, as I mentioned, is the leading gold purchaser and has, and among the leading gold refiners in the world. So there's a lot of kind of connectivity between gold, between Russia and China, that's related to gold, whether it's directly on gold or, again, gold in exchange for other kinds of services and offerings. And on the Russia side, it's also important. This is where the sub-Saharan Africa piece becomes important. We've talked a lot about the cartels in this discussion. 3 years ago, we probably would have been having a somewhat obsessive conversation about the Wagner Group. When I was at the State Department, I think at one point, maybe this time 3 years ago, there were 5 pieces of legislation trying to designate Wagner an FTO or some other kind of intervention focused in a decent part about its role in gold and mining, that in Sudan and the Central Africa, in Mali, in many cases, the Wagner Group, now largely reconstituted as something called Africa Corps, is either getting paid in gold, is getting offering, is essentially given access to gold mining, or is getting the assets once they reach the capital. There's a sense that some of that gold is actually now moving into Russia to enable it to have a kind of more liquid form of gold, so to speak, that can then be used in exchange for weapons, other services, those kinds of things. So it's really across the whole supply chain. There's a guy named John Kennedy, who's a writer and researcher for RAND Europe, who's done probably the most comprehensive and detailed reporting on the way Russia has been connected to the gold sector. And the sanctions side, there's sectoral sanctions on mining. There are, a number of gold companies that have been sanctioned, officials, but we've never really seen, I don't think, focus on gold in the way we have, say, oil, right? Like we've never looked at the price, should we have had a price cap? Again, that would have been tricky gold, but, thinking about what's the market intervention here, because again, gold it's not oil for sure in Russia. And I don't mean to suggest that it's on the same par, but it's not far behind, and it's important. And as you're busy disrupting oil, you have to be thinking about these other sectors. And I don't think we ever really had a comprehensive enough or nuanced enough conversation about where that goes. And the last thing I'll say on it, maybe turn to David, is because then you have to, it's not just about Russia, it's about China, and it's about, we haven't really, we've somehow gotten almost an hour through and we haven't really talked about the UAE and Dubai. But Dubai is the center of a lot of illicit gold trading, and it's the center, it's an important gold center. It's where most sub-Saharan African gold ends up, especially on the illicit side. And it was a major hub for Russia. It's an important hub for the Chinese and others. And we have a lot of equities in the UAE. So figuring out how are we going to be disruptive of gold when we're trying to get the UAE to work with us on export controls and any other number of major priorities has turned out to be really challenging, and where a lot of kind of good ideas have gone to sort of run the ground.
Well, we also haven't mentioned Turkey on that same score.
Yeah.
David, sorry to cut off.
That's okay. I would say, Brad's covered a lot. I mean, by the way, Russia just announced today, I think it was, that they anticipate producing themselves 500 tons of gold this year, which is it's a huge uptick. And, one can't help but wonder how much of that is actually going to be domestic production. But what we're really looking at right now, especially in Africa from the Sahel on down, and Sudan on down, is the great game for resources. And the UAE is a major player in that. So it's not just that Dubai is historically a hub for illicit gold flows, or Istanbul, or for that matter, Miami. But the way state actors are contending for control of, everybody talks about critical minerals, but gold is a huge piece. And gold is a really good first step in building a certain kind of relationship with the elite or with the government in certain producer countries, that then from there you can develop more influence and deepen the relationship. And also there's some complexities here I want to touch on. Brad mentioned, we have a lot of equities in the UAE. There is, for instance, one company that's a joint venture operating in Sudan and across the Sahel, and even into Ghana, that is a bunch of guys from Gazprom Bank, who, which is a sanctioned entity, who moved from there and formed a JV with essentially Abu Dhabi's people. And that JV is essentially what they did was they immunized themselves against sanctions, because who's going to sanction companies that ultimately answer to the Bani Fatima, the guys at the top in the UAE, and no one's going to sanction that company. And then you also see things like Ghana had for a while there what they called the gold for oil deal, where Ghana's a major gold producer, and they were essentially doing a physical commodity trade, or there was also a second payment where they would convert it to their gold production to cash. It was all running through Dubai in order to pay for fuel to supply Ghana. Well, I'm not going to just jump from correlation to causation, but during the period, the time span in which that deal was in place, you could literally just track the tankers moving from Russian export terminals to the Tema offshore terminal in Ghana, right? And so the deal went through Dubai, but it seemed to me, I will say, as if the fuel was coming from Litasco or another Russian provider. And that those shipments stopped when the deal stopped. So they were coterminous with gold for oil. And one of the interesting complexities about this is that one of the participants in that arrangement was a US-based trading company that was handling some of the gold. And, how do you deal with that kind of complexity when that company was sort of operating in Dubai, and who knows what they knew or didn't know, or what the precise legal framework around it was? It's not necessarily that anybody there was guilty of any kind of malfeasance, but it's very, very interesting. How do you sort of track these complex deals in which gold becomes, in that one deal, both a kind of hard currency and a commodity being used in a physical commodity trade in order to secure basically sanctioned fuel, it may be, at the sanctions discount? It's extremely complex stuff.
Yeah, and I think that, that example and some of the stuff that we talked about today kind of leads me to the point where maybe there are some issues with the effectiveness of U.S. sanctions when it comes to the gold sector, and then also when it comes to gold payments in connection with otherwise sanctioned transactions. So I'm going to kind of throw out the $1 million, or with inflation, maybe $100 million or $1 billion question. I mean, how do we make U.S. sanctions policy more effective when it comes to gold, both as kind of going after the gold sector? Because right now, I heard, I think from Brad, that you do want people in this sector in some ways, because if you drive the legit people out, you have these rogue sectors that are out there that create environmental issues, that create wealth distribution issues. How do you formulate an effective sanctions policy that doesn't kind of turn the industry into the Wild West, while at the same time doesn't allow a sanctioned government to do things that contradict U.S. foreign policy?
Yeah. Maybe I'll start, David, and then you want to jump in. I mean, I have a few things that are top of mind for me in terms of how you get there. The first is intelligence sharing. The UK government deserves, I think these days, a lot of credit for being maybe one of the few governments that's really focused in a thoughtful way about gold overall. They hosted a summit. They're going to have another one later in the year. And they have basically launched a subgroup of their JMLIT, the Joint Money Laundering Intelligence Task Force, to try to bring together, banks and gold companies and others to share intelligence. Because part of the problem is, there's an enormous amount of research out there, reports that David has written and some of the NGOs that we've talked about, and frankly, dozens of others, doesn't necessarily translate into government in an effective way, and certainly not into banks and into the private sector in an effective way. And so, and nor do we, when I was in government, really, we were trying to convene the gold sector often to say, to ask them to share intelligence, which they're reluctant to do. But you need that sort of nitty gritty intelligence sharing. The intelligence community in the U.S. is not really collecting on gold. was my experience at a very general level. It ought to be, and intelligence agencies also then, and law enforcement agencies need to have a mechanism through which they're getting the information they need from banks. They're following up on SARS, and they're doing gold sector is regulated under AML rules. Like gold companies you should be filing SARS with FinCEN and other FIUs. But ensuring that there's a mechanism through which that data can be understood, and the government is actually sharing data back with the private sector to say, this is what we're seeing. This is how you can tackle this. So to me, until we have a really coherent mechanism for intelligence sharing, we're always going to be just sort of chasing at little threads. That's one. Two, really is the development side. And it's, again, not a traditional part of sanctions policy, but unless we can really ensure that we have a coherent approach to investment. Again, there's the large scale miners, the Russias, the Chinas, Australia, Canada, the US is an important gold miner. But unless we're thoughtful about what's that mining sector going to look like in Mexico, in Indonesia, in Ghana, in Sudan, in Peru, at the large scale and at the smaller scale side, because, as we all know, sanctions aren't effective unless they're pushing towards a policy objective. And if the policy objectives that sanctions are working on always remain micro, they are always focused on the country or the narco group or whatever it is, how do we have gold disrupt this place that we're worried about? You're missing the broader picture, right? You're missing the broader context into which the gold moves. So unless we have a policy that looks at gold more generally and says, how do we ensure responsible investment? And there are lots of frameworks for this. None of this needs to be recreated. It just needs to be focused on, and there needs to be the political will to engage on it. There are lots of great organizations, Impact in Canada and many others, that do lots of really good work that need that support and say, like, how do we get on the ground and do this properly? Because then we have a gold policy that can then complement our Russia policy or our Sudan policy or our Venezuela policy. Unless those two policy things link up, sanctions are just the thing we're doing to say we did something, and maybe we're trying to be disruptive. And then the last piece to me is on the private sector side, is about transparency, right? Because the private sector, on one hand, you can't, as you noted earlier, you can't trace gold, because at the end, the bar you're getting to at the end is, as David said, 99.99% pure. The way you trace natural resources is usually by tracing the impurities side, like figuring out what else isn't in there, where did that come from, and then how do you track that? That's how diamond tracing happens and other things. So with gold, you do need, and there are starting to be some blockchain backed systems. There's something called the Gold Bar Integrity Initiative and others. There are providers out there that are doing that can help us understand how does this work and force the gold supply chain to be more transparent about where things are sourced. It remains really shocking to me, to be honest, that we are 3+ years into a declared and I think uncontroversially declared genocide in Sudan. And there is mounds of reporting talking about how that conflict is essentially funded by gold on all sides. That gold goes to the UAE through, whether it's through Chad or Uganda or wherever, Egypt, Turkey. How is it that flow hasn't really ebbed at all, despite a lot of focus and attention of policymakers and wishing that it would change? That's a transparency issue. That's a question of what is the private sector doing. We haven't really also talked about recycling, and gold recycling is another piece of this puzzle, which is gold that comes out of refineries in the UAE and other places. It's not labeled as the feedstock is, it's not labeled as Sudanese gold. It's Sudanese gold and some other stuff is thrown in. This is a sort of crude oversimplification, but other stuff is thrown in and voila, you've got recycled gold. Recycled gold is a good thing. It's good for the environment, et cetera. There's a lot of debate in the gold sector about that problem. Until we have a private sector that is more fully transparent to match the development side, to then match the intelligence of where are the bad guys acting, that's when we can come up with a coherent sanctions approach to gold. all of that is really hard. It takes time. It takes political will. It takes consistency. It takes people in government who know the issues and are willing to sort of spend more time on it. And I think because those things are in short supply, we don't get as far as we should. I think, again, the UK, I think, is making some important strides on a number of these areas. I hope the US will continue to focus. I mean, David mentioned it. The last thing I'll say is, David mentioned it, kind of in passing that, you don't need to spend much time to know the US and much of the world are obsessed with critical minerals. And, under the US statutory definition and under many statutory definitions, gold doesn't count. Because it's A, because of what it's used in, and B, because its supply chain is invulnerable to disruption. Gold's everywhere around the world. It's not, we're in all-time record productions. It's hard to disrupt. So it's not considered critical, but it is. It should be. It should have that same level of focus. And when I was, in the administration, the Biden administration, it was really hard to get even then, before the current kind of scramble, to get policymakers. They were thinking about cobalt, and and I think that was really cobalt's important for sure. But until the Chinese label gold as a strategic mineral, the Japanese do, plenty of Purdue. Until we take that approach and really elevate it in the way that we have now with oil and sanctions, I think we're a long way from doing anything other than like, hey, we did some stuff and we threw on some actions. And, I like to describe gold as a punch in the face. Sanctions as a punch in the face. We've thrown a lot of punches, but we are a long way from winning the fight, let's say.
Yeah, I would. I think Brad's spot on there. I would add a few things. One is that, the nature of gold. Again, that hybrid nature of gold makes it very, very difficult in terms of sanctioning. It could be moved around a lot. Russia has found multiple ways to move gold out of Russia, triangulating it through aligned third countries, using pop-up companies elsewhere, subsidiaries of Swiss firms, et cetera, to do that. They can also source it abroad and use it abroad without ever having to bring it back home. But another, important thing to mention here when we're talking particularly about state actors, China's been vacuuming up gold from all over the world for a long time now, and they've made absolutely no secret of the fact that they want to have more than anybody else, and they probably do already, because they're certainly not telling the truth about how much they have, and then there are a number of good analyses out there to indicate that, and it's interesting because one piece of this for the sanctions puzzle is we've already seen, as Brad mentioned, Russia look to gold almost as, not even almost, but as preparatory action for starting the invasion of Ukraine, because they knew they were going to get economic pressure. They knew they were going to get sanctions. Well, a lot of countries and a lot of jurisdictions are trying to collect gold now to position themselves to be major trading hubs. Obviously, Dubai and Istanbul already are. Abu Dhabi's doing more. Singapore and Hong Kong are in a kind of arms race, sort of, about gold right now. The Shanghai Gold Exchange is booming, and if it may be just a sound long-term economic strategy to withstand any number of shocks to stockpile gold, but it would also be something that, looking at the Russian model, you would do if you were going to take some kind of action against Taiwan. If you're China, you want to have that insulation against the sanctions will come. So there are broad contours here geopolitically that need to be folded into the picture. There does need to be, as Brad said, a lot of information sharing. I've worked with private sector actors like financial institutions in the Middle East who are looking to shore up their due diligence processes. And I would literally ask them, okay, every intermediary from mine to market escalates risk, right? You've got these suppliers, or you've got clients who are operating in the trade. Can you get them to tell you, like 3 or 4 steps up the supply chain, where their gold's coming from? And the answer they get from those guys is, we can't share that. That's trade secret stuff, So getting that kind of transparency, especially upstream, is absolutely critical. I would also add there are legal loopholes that are just obviously waiting to be closed. If you walk into Miami International Airport with a bag full of Doré bars, you do not have to fill out fenced-in Form 105 because it is not considered a cash equivalent. And so people are doing that every day. The joke literally is the only way to get caught smuggling gold into Miami is to hide it.
And I think that seems like a good place to leave this conversation, at least until the next time. So, Brad and David, thank you so much for joining us. Collmann and Melissa, always great to have you on the podcast. And thanks again. We hope to have you back. And until then, stay sanctions free. Thanks for listening, everyone.
Produced by Heartcast Media.